Hello, myself Nethmini and my team members Yasanth and Akila are here to present about the investment decision on Canadian Natural Resources Limited. Let me start with the company profile. Canadian Natural Resources Limited is one of the largest heavy crude oil producers in Canada, based in shallow gas basin of Alberta, which was founded in 1973. And their main products are light crude oil, heavy crude oil, synthetic crude oil, natural gas, and bitumen. Currently, company shares are listed in Canadian and US stock exchanges and traded at Canadian dollar 67.05 with a market cap of Canadian dollar 78.91 billion. Locally, they operates in 4 provinces, mainly in Alberta, BC, Manitoba, and Saskatchewan. And offshore operations are happening in UK North Sea and offshore Africa. In terms of total revenue of oil and gas industry in the country, in 2020, the revenue was $93.7 billion. As you can see, from 2015 to 2019, there was an upward trend in the revenue. But in 2020, it has decreased from 28% due to the pandemic situation. In year 2021, among the leading oil and gas companies in Canada, CNRL has placed 6th in terms of revenue, and it was 80 billion US dollars. Now, Akila will present about the financial analysis of CNRL.
Thank you, Nethmini. Hi, I'm Akila. I'm going to talk about financial analysis, valuation, and investor recommendation. We all know 2020 was a very challenging year for most of the businesses around the world due to the pandemic. Canadian Natural Resources Limited also suffered due to the pandemic. Due to the low demand of crude oil. Apart from 2020, all investor-related ratios were going in positive direction. Even though their revenue decreased by 28% in 2020, their net profit margin came down by only 2%. That means they managed to managing their operating expenses very well, even in a pandemic situation. Although they managed to pay dividend in 2022 as well. Next, the valuation. When it's coming to valuation, current share price is $67.05. Net profit for 9 months ending is $5.1 billion. Assuming the Q4 results will be same as the Q3 results, we can arrive into a forecasted EPS of $6.20. Their P ratio of $10.82 indicate that investors valuating the company 10.82 times more than their EPS. Then the valuation also forecast 12 months into it will go up to $90 and it will be low in case it will come down to $56. Then the net profit. Investors are like to invest in profit generated companies. Their profits are moving upwards before the pandemics and even after pandemics. 9 months ending results are 5.1 billion net profit. Then investors also like to invest in capital appreciation shares and dividend high dividend pay in companies. The Canadian Natural Resources Limited, their capital appreciation over 5 years is going in increase trend, and the their dividend growth is 13.8% over the years. Next slide will be presented by Yasanth.
Okay, thank you very much, Akila. My name is Yasanth. I'm here to talk about investment risk. When we talk about the investment risk of the company's business, volatility in price of crude oil and natural gas is a cause to be concerned. Quality of the product is heavily associated with the natural resources, and it is uncertain too. Labor issues and operating hazards are inherent in this business operations due to its complicated nature. when we talk about environmental, social, and governance. Over the years, Canadian Natural has kept much emphasis on environmental, social, and governance aspects, that they are considered as one of the leaders in the same. They heavily focus on innovation and invested about $3.9 billion in research and development since the year 2009. And they have taken initiative to plant 5.9 million trees, and we claimed about 9,200 hectares in North American territory. Although the business operations has through the business operations, it has offered 82,000 plus full-time job opportunities, and contributed to the economy in a big time. And when we talk about the investment summary, Canadian Natural has declared that they expect to make capital expenditure to the worth of 4.3 billion in the year 2022, and it is an increase of 18% when compared to the previous year figure of 3.5 billion in the year 2021. As of 19 March 2022, the company's weighted average cost of capital reported as at 11.29%, and return on capital investment reported as 10.16%. Although the weighted average cost of capital is higher than the return on invested capital, we recommend investing on the company based on the factors such as a high demand for crude oil will persist, as the companies as the supply shortage experienced due to war sentiments between Russia and Ukraine. Although the whole world is geared for renewable energy sources, the conversion pace to the same is very low due to various reasons. It has been observed that the investment over the same is prolonged. Further, we foresee a favorable business outlook for Canadian Natural business in the years to come. There is an anticipated boom in the economic activities with the pandemic. Further, it was observed that dividend growth and payout of the company, share price also in the increasing trend, and the commodity is one of the most valued and most demanded product in the world as far as the transportation and the other related economic activities are considered. And considering the above facts, we recommend to potential shareholders to buy the company share and to hold the shares for existing shareholders in order to make a capital gain. And that's it for our presentation, and next will be our references. And thank you very much.